So the National Association of Realtors just released a new housing report, which has got me very concerned. And in all honesty, I think that this housing market may be worse than I originally thought. So today I want to run through this report, go over some of my key takeaways from it, and go over how these numbers are going to be impacting not just the housing market, but our economy and even our society as a whole. So let's jump right into this. So the biggest takeaway from this is that home values have increased 15% in the last 12 months. So 15% is a huge number. On average, over the last 100 years, homes typically appreciate 3% a year in value. So 15% is 5 times as much just in the last 12 months as we typically see. Now, I've been previously citing another National Association of Realtors report saying that home values had increased 8%, and that's what it was a month or two ago. So we jumped from 8% in home values to 15%, which is astonishing. So to put that in perspective, if you owned a $400,000 house, that house is now worth $460,000. So over just the last 12 months, just by being a homeowner owning a home, you've made $60,000 in equity as a homeowner. And so if you do own real estate, congratulations, I'm sure you're pretty happy right now. What has got me concerned though is on the flip side of that, if you're a home buyer, you now have to spend $60,000 more to get into that exact same property that would have been $60,000 cheaper 12 months ago. And this really is concerning to me. And this goes back to that K-shape recovery that we're seeing. So we're seeing this in our economy right now, that people who own stocks, for example, they're doing very well. The S&P 500 is still reaching new highs, and tech stocks are doing fantastic. But 50% of Americans own 0 stocks at all, right? And you have this other group of Americans that are really hurting right now, right? The working class Joes, a lot of them have lost their jobs or they're just underemployed. A lot of the self-employed people, they have a lot less work right now. We're now seeing this K-shaped recovery in the housing market as well, except it's going to be people who own homes and are now building $60,000 in equity in their home. And those people who don't own homes but want to be homeowners, they now have to spend an additional $60,000 to buy that exact same house. And this is what's got me so concerning. It is becoming harder and harder for first-time home buyers to even get into real estate and to buy their first property. And so this 15% growth is over 12 months, from September 2019 to September 2020. But most of this growth has come from March of this year. That is when this growth really started accelerating. So really, we've seen most of this growth in 7 months. And my concern is that that number, 15% over 12 months, may go even higher by the time we get to March of next year. It wouldn't surprise me if we see 20, 25, 30% growth in home values from March of 2020 to March of 2021. And that's just going to escalate this issue that we're having of making it harder and harder for home buyers to actually get into the market. And that K-shaped recovery that we're going to see is just going to make that divide bigger and bigger. And so let's look at some other stats from this report as well. So according to NAR, home sales are up 21% in the last 12 months, and they're up 9.4% just from the previous month. And that's 4 months in a row that the home sales, the number of transactions going through, has been increasing. And we've seen an increase in the number of transactions month over month for 4 months in a row now. So the number of transactions is not leveling off, it's increasing every single month. And here's what's interesting, at the exact same time, we're seeing the number of inventory, the amount of listings hitting the market, decreasing by 19% compared to 12 months ago. So over the last 12 months, the number of homes entering the market is way down, but the number of transactions going through is way up. So what this means is virtually all homes hitting the market are being sold, and we have a lot of older homes that have been on the market for a long time that are also being sold, and there's just a huge demand for real estate right now, even though we have shrinking inventory. So we have shrinking inventory, but the number of transactions every month keeps going up. That is what's driving the prices right now. huge demand from buyers and very extremely low inventory right now has turned our real estate market into an extreme seller's market. That's just basic supply and demand, which drives all markets. And we're not seeing any signs of this slowing down. It's actually increasing, which is why I'm thinking by March of next year, we may be at 30% increase in home values. And here's what's really interesting is that we have this huge demand for buyers right now, while at the same exact time, we've seen unemployment rates range from 14% at the highest to about 8% right now. So even with all those folks that are unemployed, we still have that huge demand for real estate right now. At the peak in the 2008 market, the unemployment rate got to about 9%. So we're right there in that range right now, but we still have this huge demand. So really, this goes back to that K-shaped recovery. And the 90% of folks who are employed, those are the ones who are really driving this market. And not only do we have 8% people unemployed right now, we have a lot of underemployed folks as well. A lot of small business owners like myself that are not making as much money as they once were and who are suffering right now because of the economy. You know, a lot of them are not really buying properties right now as well. So if we go back to that K-shaped recovery that we're seeing right now, there's enough people in this top group that they're driving the market. And so even if we have a more of an economic downturn and we see unemployment rates go up, you know, it appears that those high unemployment rates are not really enough to impact the real estate market because they've been high since March and home values are still just skyrocketing since March. So we try to look forward into the future and try to see what the housing market is going to do over the next 6 months, 12 months. You know, it's really hard to say, but we can kind of look at the two big catalysts, which is the number of buyers in the markets. The number of buyers in the markets largely driven by low interest rates right now. Federal Reserve has already said they're going to keep those interest rates low until 2023. I think a lot of buyers are also entering the market because they keep seeing the home prices going up and they want to jump in on that bandwagon. I see home prices are going to continue to go up as well. The other big catalyst is the low inventory. And yeah, inventory is going to stay low for a long time, at least all throughout the winter. The current situation that our economy is facing right now, that's going to just get worse over the next few months. We're seeing record high levels of cases right now. So that is going to get even worse and inventory is probably going to shrink even more. At some point, we will have the foreclosure crisis. That is going to happen. And when that happens, about 6 to 12 months after that, we are going to see a rise in inventory. I don't think it's anywhere near enough to fill the demand for homes right now. A lot of those homes are also not going to be move-in ready, so a lot of them are not going to qualify for the federally backed loans like FHA loan, VA loan, etc. So there's still going to be a lot of buyers who can't even purchase those. I see that maybe slowing down the market, but I honestly don't see that crashing the market or stopping this crazy growth that we are on right now. And I honestly think that, you know, in my personal prediction, that home values are going to continue to rise, inventory is going to continue to shrink, and demand for homes is going to continue to grow over the next 6 to 12 months. Now, there's a caveat to all of this. You know, any prediction that you can possibly make about the home values, whether the market's going to crash or continue to rise up, and that caveat is that we don't know what the government is going to do, what policies they're going to enact. For example, right now, most states have a moratorium on foreclosures, and they also have a moratorium on landlords evicting their tenants, right? They can't do either of those things. That is on a state-by-state basis, though, and some states like Florida finally started or just started letting landlords evict tenants and letting banks foreclose on people who are hurting because of the economic downturn. But other states like Maryland, that moratorium is still in effect and will probably be in effect until late next year. So factors like that is really going to impact your local housing market. Another factor is going to be your local jobs as well. Here in Maryland, we have a lot of government jobs. We have a lot of military bases here as well. Those are all secure jobs. But if you're someplace like Florida and you really rely on tourism, yeah, a lot of those jobs are really hurting right now, and you're probably going to see a lot more foreclosures, and maybe the demand may be a little bit lower in those markets as well. So really the housing market is going to be on swing pretty dramatically based on your city and your state and your geographical area, what the major employers are in your area. So if you're a homeowner, great, congratulations, your home's value is way up. I think it's gonna continue to go up for a while now. If you're a buyer trying to get into the market, it's tough. It just is tough, and it's going to get tougher over the next 12 months, unfortunately. And we are gonna continue to see that K-shaped recovery of homeowners and those folks who want to be homeowners but can't get into the market. So if you are a homeowner and you're thinking about refinancing your home to lock in some of these lower interest rates, check out this video I did right here breaking down why that's not always a good idea and how sometimes the banks are actually scamming you when they're trying to get you to refinance your home. And I'll also go over when it does make sense and what the formula is that you need to calculate to figure out if it makes sense for you and your family. You can find that over in this video right here. Don't forget to subscribe and hit that little bell icon to get notified every time I upload a new video. Thanks so much for watching. I'll see you over in the next video.